Good evening. This is Ken Long at Tortoise Capital with a review of the chat room transcripts for March 20th, 2017. I'm going to go through a series of different styles of trades. Today was a pretty active day. The first one we're going to look at is a hybrid frog. We're looking at target win, W-Y-N-N. We're using a 70-cent hybrid frog box. So here's the open. We're on 1 minute charts. 3 minutes into the day, there's a minor gap up. We get a 70-cent move to the upside. We take our entry, place our stop 70 cents away. We get a normal move up to 113.25. So that's a $2.25 move on a 70-cent initial risk. 3R with an exit at the RLCO as the RL10 comes through the dragon. Stabilizes. We get a continuation pocket entry by the numbers. Stop just below the dragon, or 70 cents. Let's just use 70 cents. 112.80 is the entry. We get our exit when the RL10 comes back through the dragon at about 113.40. So that's 60 cents on the 70-cent risk. That's about 0.8R. I'm going to shift to later in the day in order to stay with symbol WIN, W-Y-N-N. And so what we saw the initial hybrid frog moves in here, and then a continuation that just about scratched. Later in the afternoon by lunchtime, there had been a retracement, and then a swing low, and then a higher low, and then this sets up a pocket continuation with the intention of targeting the RL270. There was a move up to the VWAP, which failed. We played the RL10 crossing the dragon for a fractional win. This continued into some failure, and so at this point we're framing this as an owl, and I want to check to see how far from the VWAP this can go. I know it can come back and close the gap. I mean, that's where it opened. So what I do is I come and look at the greatest divergence from the RL270 and the RL10. I hang that distance down here. We get a projection of a reasonable price down in here. The follow-through continues. Fast forwarding a little further, that trade moves all the way down to the initial projection, hanging that from the RL, from the VWAP, that is. I got down here, and it was coming to about an hour before the close. It had just made a nice move down, and my spider sense started tingling, so I was satisfied that we got most of the move that we were hoping for. And so that's getting short at about 112.40 and covering at 111. So that's $1.40 on 70 cents. So that's 2R. So pretty good day on win. 3 to the upside. Another there was a 0.8 in here. There's about a 0.3 here and another couple R. So that's almost 6R on win. Starting off with the hybrid frog. Now shifting back to the morning trade, another hybrid frog, this one in EWW. And what we have is from the open, a hybrid frog entry around 50.18. Get chased out of this one. It hit the second time it hit Z3 and started to fail. Took a fractional gain. Then there was a pocket entry shortly thereafter. This did not fail further. So when the RL10 crosses back above the dragon, we get long here. And then this turns into a reasonably good trade. I just want to show the exit management starting off at Z2. When we get this surge, I move it up to the VWAP and start trailing the VWAP. As it starts to roll over, I'm tightening this up to the RL90 and just holding it there to see what we get. So standard risk management. Shifting to EWZ, that one behaved about in the same way as the earlier ones we saw with WIN and and XIV. So this is EWZ Brazil. That's one of the strongest in the relative sector, relative strength sector ratings. And so we get a gap down in the morning, and then there's a 1, 2, 3 entry possible down in here, but we're waiting for that 20 cent, 25 cent hybrid frog move, which essentially turns into a pocket about 10 minutes into the morning. Start off your stop at Z2, and then this is a typical strike after a nice move, and then a 1, 2, 3. Now the RL10 crosses, you get an RLCO. This is just a standard exit for about an R. It doesn't fail. It finds support on a rising VWAP, and the river is up, and the RL270 is up higher. So by the pocket continuation, and then take a RL crossing the 10. That's about another R from 37.41 to 37.66, so about 25 cents. This is a morning trade in XIV. We get a stabilization pattern here from the open. Doesn't fail further. We get the RL30 is rolled up. The RL10 leaves the river. We can buy this here. This yellow dot shows the RL30 now leaving the river. This is the beginning of trending behavior. So this move in price here, although it's kind of noisy, this is the beginning of trending behavior. So even if you waited this long to get in, you're still okay. Start your stop down here at Z2, and then just work your way up, work the gears, and then this is a strike at the RL10 crossing the river. And this was a typical exit for a lot of those long side indexes this morning. You saw it with Brazil and WIN and Mexico all exiting about this time as part of a market-wide move. This is a trade frame I wanted to share from the chat room. One of the traders was looking at XLU. Here's the unambiguous move, and the owl is getting ready to start, and so he's framed it with a about a 15 cent yellow zone, and were it to collapse below 50.91, he would take a short position. If it breaks out above 51.04, it'd take a long position with the idea of targeting this resistance zone, and the idea of adding a second position if it breaks above the close. It turned out that this short triggered and allowed for an orderly move in utilities to the downside. That's in the XLU sector spider for utilities. I want to talk about a couple warning signs on the swing trading time frames that we saw in SPY today towards the afternoon. So this is SPY on 2-hour charts. So this is going back about 10 days. And you see there was a downward move and then a sideways quiet channel here in the yellow, and then one surge up, and then that couldn't hold. It got out to Z3, beyond Z3, and then it's been collapsing. The VWAP collapsed. The baby dragon has collapsed. The dragon has rolled over. And so our standard practice on this one then is to find that previous dragon belly right here, and this becomes a collapsing dragon pattern, which is tradable on its own merits, but it also puts the gains of the past month at risk, because now it broke through a price level that it was able to hold statistically before, because the dragon rolled up from here, and we treat that as the real support level, especially where it hits the RL270. Now there are some other patterns that we play where this move here is tradable. I mean, this is a 3-day move from 239.5 down to 236.5, so that's a 1.5% move. But on the 2-hour period, which is more sensitive than the daily. I treat this as an interesting and an important warning. Now, drilling in a little further, we have that same spike up that we saw before. This is now on a 30-minute chart and about 10 days. So this was that spike up, and this was that sideways quiet channel we saw on the 2-hour. I want you to notice how important this 236 and a half support level is. The belly of the dragon here. Spike, came down, found support at the belly of the dragon, move up. Support at the belly of the dragon, moved up. Now approaching the belly of the dragon once more. This 236 and a half is really crucial. Now you can see on the 30-minute chart just how tradable this swing is. When we see that dragon roll over, now you have an owl entry right here. So this was an aggressive way to trade this short with the target of this support level. And so that's really what this red arrow shows. The second red arrow says that if we do get a violation below this 236.50, then that negates all of this favorable price action, breaks all of this support, and now we have the potential for, as large as this move is to the upside, as large a move to the downside is available. And that would be a changing of the market conditions for sure. So just to notice, I want you to notice the RL270, that long-term holders, positive move up, a flattening, a rolling over, and then a decay all the way through here. So even with this little bump, here was an opportunity short. This is an opportunity short, and certainly the owl is an opportunity short, and this is a chance to get a second position short. So now when we consider the daily chart on SPY, looking at the market health check, you can see we've now had 3 lower lows in a row. Except for this one spiky day, we've really had 10, almost 20 days of sideways chop. It really hasn't shown any strength to get out of here. And now I treat this right here around 235 and a half is the support level on daily. If that breaks, the next one is 233. And then the next one after that is the belly of the dragon down here at 226. So we're getting close to an important support level, putting the question to it, if you will. And you can see how the slope of the RL30 has been decaying. The fact that that slope was high and then a lower high just says maybe this is starting to run. The Trump bump is running out of gas as the real political infighting starts happening with the Supreme Court nomination. All right, this is a live coaching case study from one of our traders in the room who says his question is dealing first with the chart of SPY on 3-minute bars, showing a downtrending narrow channel that finally broke to the downside. He noted a pattern 1 RLCO outside the river. He made a 1-2-3 entry targeting the Bollinger Band mean. He was vigilant on his exit, and so he was concerned about, is this the kind of trade that I would take, given that he didn't necessarily see a 2-to-1. So he's talking about this downward trending channel here. It broke to the downside. There might even be a Z3P inside here. But what he sees is a RLCO outside the river, really a Z3 excursion, and then a 1-2-3 entry. And so he's getting an entry here. I'm sorry, here's the RLCO. He gets a 1-2-3 entry with a stop below the swing low. And his target is the Bollinger Band mean. He is judicious about playing this one, and gets an exit in here as this starts to collapse. And he said, would I take that trade? Well, I don't mind taking that trade. I think it's a measured move. The only concern I have on this one is that you've got a downward channel. You've had one spike collapse down. Although this is tradable, the Bollinger Band mean really is your initial target. You could say the far side of the river. But what I would be really concerned about is as it gets back to the mean and starts to collapse, this is really where I want to be short. So if you take this trade, you've got to get out here, but you should be really thinking about this being short because you've got the primary trend down, You've had one big volatility break to the downside. It labored getting back to the Bollinger Band mean, and now that becomes a swing high. You have a high, a lower high, a lower high. This makes a nice short. When that collapses, you see you get a nice move down here almost to C3. And then later you have an owl entry in here later in the afternoon. But so this is a trade that's reasonable. It's feasible. But you have to not believe in it. You have to really monitor that your exit here around the Bollinger Band mean. At that hesitation, that's a fantastic exit. Let's see. Okay, and now he takes a second trade, the one we just observed. So now there was another Z. It went beyond Z2. He gets a 1, 2, 3 entry. He's targeting the Bollinger Band mean and the far side. It works. Gets all the way to Z plus 2. 1, 2, 3 exit. Perfectly played. This is a nice owl entry right in here. That's and just a superb exit. So so on the 3 minutes, are these valid trades to take? Yes. And how do you handle the unfavorable reward to risk to the first target? Well, the first target is just what we're not entitled to be surprised. I always play to the far side of the river because that's the limit of normal. So if you get a move and it goes beyond, but then reverts back to the primary trend, it can get to Z plus 1. So that's normally what I aim for Z plus 1, but I'll settle for Z0 in the meantime. Okay, so now the next question is concerning with on the daily chart that channeling and overreactions and 5DDs seem to be in opposition to the RLCO signal when they trigger. So let's call up that chart real quick. All right, so just we'll just take a look at the channeling because we've got the Williams percent R10. So here's this is going to be a channeling signal right in here. Yeah, this one triggers channeling, but it only got to the Bollinger Band mean. But I actually don't mind that because what you have is an upward trend. Your target is at least the top of this 10-day high. I like that entry. It allows you to get back into an orderly move to the upside. Your next channeling doesn't really occur until you're getting close in here and certainly by here. These are trades that you can take. This one was like a 5DD. Now, his observation is that's going against the P1 of the RLCO, and that's just a fact. If you're going to play the RLCO pattern, what it means is you're getting short here around the 1, 2, 3, and your target is the Bollinger Band mean. But the 5DD and the channeling signals don't occur here, and then they're looking for a resumption of the trade. So the way I like to play that is by framing the entry. The entry day. Let's see if we can pull this down a little bit. And so if this was my pattern, I'm not going to enter automatically the next day. I can frame this as a trade and take an excursion higher than the setup bar, so I can get an entry here with a probably stop below the Bollinger Band mean, and then you get some kind of move through here that's not unreasonable. What you have to realize that the patterns that we are picking allow for reasonable reward to risks in both directions. They're finding critical states, and so it's not a slam dunk in one direction or the other, and you have to take into account market condition and maybe tactical timing. Intraday. If you can be trading on the 2 hour or the 30 minutes, as we've seen, that gives additional information that's available. But my advice would be is to paper trade both sets of patterns to see whether you like the buy on dip or the reversion to the mean trade. The reversion to the mean trade is at P1, and then the buy on dip is like the channeling and the overreactions. So one of those two styles is going to feel easier for you. I would track your performance stats and see which one of those actually is performing better the way that you have them implemented. So hopefully that helps. So we're 20 minutes into it. Looking forward to another good day tomorrow. It's Ken Long at Tortoise Capital. Keep your wrist measured and your powder dry.